Hi, good morning everyone, and thank you very much for joining in. Firstly, thanks a lot to Cafe Mutual and the entire team for hosting this event. Extremely excited to be part of this and talking about India in front of you all. So maybe, before people join in, we can have a quick survey in terms of, just to understand how this particular audience thinks about, which maybe, will give me a better sense in terms of what we can talk. So I think, the first thing which we all need to understand is whether we strongly believe in equity asset allocation mainly for future wealth creation. So if just by maybe a raise of hands, show of hands, if people can, think about it that equity clearly is an asset where a large part of your wealth creation can be created, and people who strongly believe in that, if we can just have a show of hands to support that. Yeah, so I think that's a pretty positive response from the audience so far. And secondly, I think that, from last few interactions in this region with multiple investors, what we have gathered is that, people do believe in India as a story. But I think that the general perception is that large part of the India growth story is behind us. And I think there is some sort of skepticism in terms of how they look at India going forward. So maybe on that front, if we can have a raise of hands in terms of people who believe that large part of India's story is behind us, and maybe, at current levels, we should not be investing in India market. If we can have a show of hands on that as well. Yeah, so I think most of them are still positive about India, which is a good thing to know. So just to take that forward, I think that, as like any other money manager and being extremely bullish on India, I'll be talking about India as an investment opportunity. But what we can do is we'll share a lot of data points to support this whole story. And we can make it more interactive so that, in case if we have any concerns or questions on that front, we can address that. So let's make it more interactive among the audience and, keep discussing whatever queries or concerns people have. So let's get started on this. So I think, what we'll do is we'll take a sense in terms of how the global markets have behaved historically and how within that the Indian markets have also performed. So if you look at this particular chart, you'll see that, this gives you a sense in terms of how last decade has been for developed markets, emerging markets, and then within emerging markets, how India has actually performed. So you'll see last decade has clearly been for the developed markets, where US and other developed markets together has delivered a CAGR of almost 9%. Versus that, if you look at emerging market, and for the last decade, China was one of the biggest market within EM, because of which the entire emerging market has delivered only 1% CAGR over last decade. But clearly the outlier has been the India story, where the growth rate has been phenomenal over last decade. And therefore, in spite of emerging markets not doing well, India as an economy and India as a market has delivered almost 13%, which is far superior than the developed market as well. So I think the key point to take out from this is that irrespective of a particular region not doing well, if you have an economy which is doing exceedingly well, that market will continue to deliver superior performance even in that landscape. So I think clearly now we need to see going forward, how do we see the difference between developed market and the emerging market. So this is how we look at, going forward. Now, considering that the interest rates have been so high globally, most of these developed markets will face some sort of headwinds in terms of growth. However, if you look at India growth story, that continues to still stay strong. And historically, if you look at it, the difference between the developed world and India growth rate was very narrow, which has actually widened up now. Because if you look at now, the US growth rate will be more like 2% odd, versus the India growth will be anywhere between 6 to 7%. So there's I would say, a significant alpha in terms of the growth rates, which will drive the India performance going forward. And I'll just share, one strong data point over here. If you look at the overall US market GDP, it contributes around 25% to the global GDP. Whereas if you look at the US market cap, it stands at somewhere around 65% of the global market cap. So if you, relate the numbers, somewhere I would say that the US outperformance with 65% of the total global market cap is to some extent from year on expecting a similar compounding looks difficult to me. Versus if you look at India, India is at a 4% to global GDP, and in terms of market cap, it stands at only 5%. So that clearly tells you that, if India continues to grow at around 10 to 12% nominal GDP growth rate, the outperformance of India market versus the developed world will be pretty significant going forward. This is how, the whole FI community, I would say, have participated in the Indian market over last decade. And you'll see a very surprising number over here that over last decade, the net outflow for FIs, for a fairly long time, FIs were investors in Indian market to the extent of almost $20-25 billion annually. But now if you look at the cumulative numbers because of the outflow which we have seen over last 4 years, over last 1 decade, the outflow of FI has been almost to the extent of $100 billion. And mind you, this is only on the secondary market. This doesn't take into consideration the primary market, which is a very big number because in spite of markets doing so well over last 1 decade, because of the global headwinds, or I would say higher interest rates or n number of other reasons, we have seen $100 billion of outflow from FIs. And in spite of that, Indian markets have done very well. So FI as a community who used to hold anywhere between 22 to 23% of Indian markets now stands anywhere close to decadal low number of around 17 to 18%. And now if we strongly believe that India growth and India earnings is going to be anywhere between 12 to 14%, and if interest rate cycle is turning around and we are going to see interest rate easing, if any significant inflow comes into emerging markets and more into EMs, the kind of inflow one can expect can be pretty significant for the Indian markets. So I think with that backdrop, that covers the whole growth perspective as well as, how the FIs have positioned in the Indian markets. Versus that, if you look at it, what has clearly been a transformational, I would say, a pocket within India is the financialization of savings. So, there was a period where on a monthly basis, the Indian mutual fund industry used to get an inflow of less than $1 billion, right? And that was not too far behind. But today, as we speak, on a monthly basis, the Indian mutual fund industry gets an inflow of anywhere between $7 to $8 billion, which is almost 8x of what we used to get earlier. This is mainly because, more and more people are participating in India growth story, and that is clearly the whole financialization of savings which is taking place. We now have almost, as you can see, 170 million demat accounts in the country and almost 40 million unique portfolios in the mutual fund industry. That clearly tells you the size of participation which is taking place in the country, and this is just likely to grow. Because if you look at, the whole financial savings as any individual's overall investment portfolio into equities stands at only around 4%, versus developed market, it stands anywhere between 30 to 40%. So we are still at the cusp of a major inflection point, and I think if more and more people continues to participate, as we have seen, the importance of FI inflows, which was pretty significant earlier, is going down as we speak. And most importantly, as earlier participants also spoke about, people are getting more and more sophisticated in terms of where they want to invest, and therefore the whole alternative space is gaining a lot of traction in India, be it AIF, category 2, category 3, and multiple other, I would say, alternative products, which is gaining a lot of traction. Similarly, on the PMS side, considering they are more customized portfolios, more focused on mid and small cap, where the return profile is far superior than, I would say, the mutual fund category, we are seeing a lot of interest into these kind of alternative products. So clearly, the beneficiary of this whole financialization of savings has led into significant growth for the whole mutual fund industry, as well as, the whole alternative space. Now, why this thing is gaining so much traction? Clearly, at the end of the day, my limited experience tells me that at the end of the day, liquidity will always be slaves to earnings or growth. And clearly, in spite of FIs moving out dramatically, we have seen Indian markets doing well, mainly because of the growth that we have seen over last, I would say, 5-7 years. Yeah, so if you look at, since FY17 till FY23, the earnings compounding has been at around 12% odd, right? And that is exactly in line with how the benchmark Nifty has also performed. So therefore, in spite of, as we saw, emerging markets not doing that well, because our earnings were pretty superior, the price performance has actually followed the whole earnings profile. And going forward, this is just likely to get better. And therefore, we expect, the Nifty earnings growth going forward, which is the major benchmark, will be in excess of around 12%. So one can expect a similar kind of a price performance as well over next 2 to 3 years. Now, one clear thing, and I would say that my limited experience again over here has been that India has been more of a thematic market. If you are able to capture the right theme and broadly, participate that theme across the spectrum, the kind of money which can be made can be really significant. And you can see some examples over here, what has happened to the entire transformer space, or what has happened to the entire hospitality sector, or even for that matter, the entire capital market. If you manage to pick the right theme and participate into that theme, the compounding can be in excess of anywhere between 60-70%. So just to, talk about something like, the entire EMS space, which is nothing but the electronic manufacturing sector. Over there, if you look at it, a player like Dixon, few quarters back, they were doing a quarterly operating profit of anywhere between 100 crores, right? And therefore, they were anywhere close to 400-500 crores on an annualized basis. Last year, they clocked a number of somewhere around 700 crores. And as we speak, since last 2 quarters, on a quarterly basis, they are doing numbers around 450-500 crores on a quarterly basis. So that's the kind of, a significant growth which certain themes are actually witnessing in the country. And therefore, I would say maybe a year back, stock was trading somewhere around 3,000 odd levels. And today the stock is trading around 15-16,000 odd levels. So it has gone up almost 5x in a matter of few quarters, mainly because even the operating profit growth has been pretty significant. Similarly, if you look at, the overall hotel sector, post-COVID has seen a dramatic, I would say, a rebound in terms of how the consumers want to spend money on their vacations. And the largest player, which is Indian Hotel, they were actually in red for a fairly long time. But the kind of, the inventories which they were sitting on, the profitability swing from, almost negative to an annual operating profit of almost 2,000 crore plus. So therefore, you are looking at, stock price delivering almost 85% CAGR over 3 years. So the point what I'm trying to drive over here is that, in India, you will always have certain themes which are seeing some sort of growth explosion. And as money managers, our job is to identify those themes where we can clearly make big money and participate in that particular story. So let me just, straight away jump on to what are the big trends, and in this journey of India from $4 trillion to $10 trillion, which are the clear big themes that we are looking at, where as investment managers, we can clearly make big money. I think this, yeah, so we call this, this period what India is going through as India's Pragati, I would say. And Pragati is mainly, an acronym which we use for the 3 large themes which we are looking at. First one being premiumization. What do we mean by premiumization is mainly, how the consumption is taking place in this country. Because if you look at, our economy size, we are broadly at around $4 trillion, and 60% of that is into consumption right now. But we'll look at few data points in the subsequent slides in terms of what is going to drive this whole consumption story. Because if you have, and we have seen this with many other emerging economies, where once the per capita income crosses anywhere between $2,500 to $3,000, any incremental disposable income actually goes into multiple categories which can see significant explosion. And that is something what we are seeing in India as well. And as I said, we'll talk about that in subsequent slides. The second big theme which we are looking at is globalization. And by globalization, what we want to highlight here is more of the whole export opportunity that is there in front of India. Now, one may talk about, China plus one or Europe plus one as one of the key reason. But I would say that, what happened with IT as a sector, or what happened with chemicals as a sector a few years back, they actually grew 5x, 10x over a period of 1 decade. We are seeing that happening with multiple smaller sectors on the API side, or even for that matter, the auto ancillary or even textiles, where smaller companies are getting a lot of inquiries and traction from the large global players. And because the capacities were underutilized for a fairly long time, they are seeing a significant ramp up and operating leverage playing out. So, the whole export opportunity, because India contributes only 2% of the global trade right now, versus most other emerging economies are anywhere between 10 to 15%. So, from 2%, even if we move to 4-5% in terms of the global trade, that can be a very big number for most of the smaller sectors which are seeing a lot of export inquiries. So that is a second biggest theme that we are actually looking at. And the last and the most important theme that we are extremely positive about is the transformation of India in terms of the infrastructure which is getting built. So I keep saying this, that the more you travel in the Western world, you'll realize that most of these economies are seeing aging infrastructure. Whereas if you look at India, that is itself a very big opportunity, because a complete new set of infrastructure is getting built. So just to share, one number over here, Mumbai being the financial capital, over last 3 years, the total amount of capex that has been spent on building the traditional infrastructure has been close to $25 billion. So this is only on one particular city. And there are many other pockets like roads, railways, and many other infrastructure plays where government has taken the lead. And, I'll just again give you one number on railways. Government used to spend, I would say, less than $5 billion at one point of time, maybe I would say 6-7 years back, on railways. Today, as we speak, government spends almost $25 billion only on railways. And therefore, we are seeing a lot of smaller companies who participate in these kind of tenders benefiting in a very big way. So these are, I would say, one can align their portfolio or investment to these three themes, where I would say that, these are not 1 year, 2 year opportunity, but at least for next 5, 10, 15 years, we see these themes playing out and keep getting pretty larger. So maybe I can just touch base very quickly on each of these themes so that, the audience can get a sense. Yeah, so in terms of, the whole premiumization story, if you look at it, where we are getting extremely confident about the whole consumption explosion is clearly the demographics. And I won't go into the whole working age population numbers and all. But I think something what we all need to notice is at the top end, who are actually driving the consumption in the country is anywhere between 70 million homes, and therefore, that comes to somewhere around 3 crore people, right? 3 crore people is actually driving consumption. This number over next, I would say, 5 years or so, we see that going to almost 12-13 crore people. And therefore, if you look at it, smaller categories like athleisure or even hotels or I would say for that matter, any of the, the shoes category or many other smaller categories are seeing a lot of traction. So I can just give you one example over here. Athleisure was a non-existing category 5-7 years back. But now we have a player like, say, Manyavar, who is doing an annual operating profit of anywhere close to 800 crores, and they have a market cap of around $5 billion. So these are the smaller categories which are seeing a massive explosion because of the demographics, which is leading into, spending into these categories. Similarly, if you look at, shoes as a category or aviation as a category, there was a time where, the number of airlines which India had was less than, I would say, 200. Today, as we speak, we have a fleet size of almost 700 aircrafts, and almost 150 million passengers travel through aviation airlines on an annualized basis. So my sense is that, there will be many such categories because of the demographic change and the spending pattern, which will become clear big winners over next 3 to 5 years. Also on the right hand side, if you look at, how the HNI or UHNI, the segment is evolving, we are getting more and more people into this particular bucket. And we all know that, once you move into your, I would say, the wealth pyramid, the kind of spending that takes place into those families into various categories can be pretty phenomenal. So one clear category which has been the biggest beneficiary in India over last, I would say, 3 to 4 years has been the real estate segment. In anyone's life, the biggest decision for any household has been the purchase of a home, right? Because it is a very big ticket spend for anyone. But that is the category which has seen a phenomenal increase across all parameters. So if you look at, the pricing, which was on an average, I would say, less than 6,000, stands at around 9,000 odd over last 3 years. So that's almost a 50% jump. In spite of, prices moving higher, we have seen the preference for bigger homes. So the average home size which anyone would buy earlier used to be somewhere around 800, 850 square feet. Now that has gone up to almost 1,200 square feet. So in spite of, pricing moving higher, people are buying more and more bigger homes. And with that, we are seeing a significant liquidation of inventory also. So we were at close to 4 years of inventory cycle in the sector, which has now been almost a year's inventory, which clearly tells you the kind of demand which we are seeing on the real estate side. So this is one category which I thought I'll just highlight because it is one of the biggest category, takes away household discretionary income. Maybe we can just move forward and talk about the whole globalization as well. So, as I said that historically we have seen with most emerging economies that when they are in their growth phase, their entire manufacturing sector, which contributes a percentage to their GDP, actually goes up pretty significantly. So, what happened with Indonesia or a Thailand or a Vietnam, they were at around, I would say between 10 to 15% when the growth rate actually started to move. At the end of the growth cycle, they were anywhere between 20-22%. So I think that, our manufacturing sector also stands at the similar level. We are at closer to 14% right now, if you look at, the chart over here. And I think that, by the time when we reach closer to $8 to $10 trillion, our manufacturing sector itself will be around 1.7 trillion. So there's a 4x kind of a jump, which this sector can see, mainly because of domestic consumption as well as the overall export opportunity. And government has laid out quite a few, I would say, policies to enable this growth in terms of the PLI schemes, the labor laws, the land laws. So all of this is coming together and facilitating this sector's significant growth potential. Coming to, how the whole transformation on the infrastructure is playing out. So if you look at, across traditional infrastructure like roads, railways, ports, airports, we are seeing massive investment from the government side. And one clear sector which is likely to benefit in a very big way going forward has been the renewable side. So right now, India has close to around 450 gigawatts of power, 450, 500, out of which the renewables is anywhere between 180 to 200. But going forward, we are expecting almost 300 gigawatt to get added to this space. So, over next, I would say 5-7 years, India's capacity will be somewhere around 900 gigawatts, out of which almost 550 will be only renewables. And a large part of this growth will come from wind, solar, and hydro sector. So we are seeing massive investment. If you look at the chart at the bottom, we are looking at massive investment into wind and solar, and therefore a lot of new listed companies, something like a Vora or a Premier Engines and all, are seeing significant traction. So I would say that these are the three broad, large themes where we are extremely positive. I'll just take a maybe pause over here and we can open up for questions.
Thank you. Myself is Neeraj Arora. So I think the India growth story is sold. I mean, as far as, I've spoken to people here or Zurich or India, I think everybody understands. The question is around the valuation.
Sorry, the question is?
The valuation of the stock market. So the question here is, right, that yes, we know India will grow. I mean, we have been hearing since morning, and this is, I think, everybody is aware of. It's hard to predict whether they grow 20%, 15%, this is fine, but we know it will be growing. What's about your view about the valuation? How are we going to create the net worth or the wealth for the investor in this market?
Yeah, so it's a fair question. So I would say that, valuation is a very, very subjective thing. And in my limited experience, as I said, that, there are two parts to this. Valuation will always be a function of growth and the return profile. So if you look around anywhere, you will not find a single economy growing at a nominal GDP of anywhere between 10 to 12%. So you have a far superior growth for a particular country. And on the other hand, if you look at the return profile, which is the ROEs and ROIs, right, the return on equity and return on investment, as a country, I think we stand somewhere between 15-16% versus most emerging economies, or even if you look at US, it is pretty subpar. So I would say that, when you have two factors going your way, you are unlikely to get that kind of a story at a cheaper valuation. And we have seen that, with multiple sectors and stocks, where the growth rate is very robust, stocks, everyone wants to participate. India is a growth story, right? So everyone wants to participate in growth, and therefore that makes those stories and I would say stocks a bit on the expensive side. But I think the key question to ask over here is that how sustainable is that high growth? And I think that, if we continue to grow at 7-8% real GDP and 4-5% of inflation, anywhere between, I would say, 11-12% of nominal GDP for next 5-10 years, if that is pretty sustainable, I find it difficult that, we will get India at anywhere less than 17-18 times PE. And therefore, now if you, correlate that to EPS numbers, we are looking at anywhere between 1350 to 1450 rupees EPS for Nifty in FY27. So we are almost done with FY25. 6 months down the line, we'll start looking at FY27, right? And then if you assign a fair multiple of 20 times on a 1400 rupees EPS, you'll get a number somewhere close to 28,000 odd. So I'm saying that we are at 24,000 right now on a Nifty level. Anywhere between 15 to 18% kind of a compounding is still pretty possible, considering the growth rate sustains at around 14-15%. I hope that answered your question.